SKF India, that is the stock on our radar. It has demerged its industrial business and the company today has listed on the exchanges at 2,630 rupees per share. Mr. Mukund Vasudevan, the President, India and Southeast Asia and Managing Director, SKF India Industrials, joining us now to take a few questions. Mr. Vasudevan, good morning. Thank you so much for joining in. If you can explain to us what is the contribution overall coming in from the industrial business and what are the growth prospects from here on now that you have demerged? You'll have individual targets as well.
Great to be here. Thank you. So this is a very exciting, momentous occasion for SKF India Industrial. We as a company have been here for over 100 years in India, listed over 6 decades ago as SKF India. And today is the next chapter where we are separating out SKF India Industrial from SKF India Automotive. And the main logic of this is that this will provide a lot more focus for our industrial customers. India is going through a massive infrastructure, industrial growth, manufacturing driven, and this will enable us to focus better there. The contribution in terms of revenue is roughly 53% from industrial and 47% from automotive. So this is a 1-to-1 split as far as stock is concerned. But with the renewed focus on industrial, we see the growth prospects of both these entities being tremendous.
Right. So the contribution is 53% on the top line. Mr. Vasudevan, if you could give us a sense on what the contribution on the bottom line is, how the return ratios of both these businesses are, so that the street can make a better judgment of the valuations.
Yeah, it's roughly similar, right? Both these are in the mid-teens in terms of EBITDA, and we expect that to improve with the split. We expect both these entities to improve margin. I'll speak on behalf of SKF India Industrial, and SKF India Industrial. We see this starting from around the mid-teens. We're around 13% right now, growing to 17, 19 in the next 3 to 4 years. Might be an initial period where because of the renewed investments we are making in SKF India Industrial, we may see a flattening out of margins, but we see that improving after the investments begin to, we reap the benefits from these investments.
So by when do you start reaping the benefits of these investments, Mr. Vasudevan?
So probably in the next 2 to 3 years. So the investments we're making over the next 3 years are in the tune of around 800 to 950 crores. And we expect the benefits to start coming in 3 years. In 3 years, we start seeing the margins. We should start seeing margins significantly improve.
Okay, from 13% to 17% is the target in next 3 years on the margins.
Yeah.
Okay. Mr. Vasudevan, when you speak about the capex schedule, 800 to 950 crore rupees planned till 530, in that, when will we see the Pune plant coming on stream? What is the initial capacity utilization you are expecting there? And how much of capex will go to just that plant?
Roughly, to answer your last question, roughly 70% of the capex, which we're talking about, is going to be for the plant, 70 to 75%. The remaining is just capacity expansion as the demand in India and neighboring countries grows. As the demand is growing, we need more capacity. So the part of it is to satisfy growing demand from industrialization in the country. Part of it is just the infrastructure for the new plant. But the new plant, just as if I may add to it, is going to be a state-of-the-art plant which has the latest in terms of automation, flexible manufacturing line, which is the need for industrial. Unlike automotive, which has long batches and very steady production for similar bearings, industrial has a variety of bearings because we serve so many different sectors. So flexible manufacturing lines, state-of-the-art AI, ML technology applied to it, digitization, which will make us much more efficient. So we expect a lot more efficient operations from this new plant.
Mr. Vasudevan,
the plant will come in 2020.
Yeah, Mr. Vasudevan, we'd request you to hold on for...
We will get back
we do
to
have Mr.
yes,
Vasudevan with us.
Mr. Vasudevan, thank you so much for patiently waiting by and being here. We were talking about your capex plans, 850 to 900 crore rupees, the Pune plant which would come on stream. If you can give us a sense of the asset turn that you'll see on this capex, and since 70% of it is going to the Pune plant, by when will that commence?
So the return on invested capital we're seeing for the Pune plant will be in the range of 15% initially. And then as the CapEx cycle starts winding down and we start reaping the benefit, that should go up to 20%. In terms of utilization of the plant, this will be a phased, in terms of manufacturing lines, this will be a phased investment. So we'll keep adding investment as the demand grows. With the infrastructure may come up in terms of the building, and the balance of plant may come up initially. And then the lines will be added initially to just manage existing capacity. And as we meet more demand, as the growth continues in industrial, we will keep adding. So we expect in the range of 70% utilization right from the get-go.
Right. But, if you could give us a little more clarity on how should one look at investment in a business like yours. If I'm investing, say, 800 to 950 odd crores, what would that mean in terms of revenue, the asset turns, as Sonal asked you about that? And secondly, you've given us a sense on how the margins will improve for the company. You'll go to late teens from early teens right now. Your ROCE will improve as well. What about your revenue? If you could give us a sense on what your current order book is, what kind of order inflows are you targeting, and what should a sustainable revenue run rate look like for a company like yours?
Yeah, so we have been delivering over the last 5-6 years a steady growth of around 8 to 9%, and we expect that to continue and if not accelerate. With the increased investments, I think once the investment starts coming up, we should see more than that. We should see low double-digit growth come up. Sorry, I'm getting a disturbance on the. Can you hear me?
Yeah, we can hear you. Please go ahead.
Yeah, sorry. So you should start seeing low double-digit growth come up once the investment starts paying off. Typically, our order book, we don't, because our large portion of our business is end-user focused, so it's consumables which are used in factories, in mining operations, in windmills, railways, etc., agricultural equipment. It's not an order book we talk about, but typically we have an order book which is anywhere from 3 to 6 months ahead, where we have a full order book and we fulfill that. Projects tend to be around 30 to 40% of what we do. And even in the projects, in some of our big sectors, like wind, like railways, there is a significant order book which we have, which will ensure this growth of around 8 to 9%, increasing in the next few years to around 10 to 12%.
Mr. Vasudevan, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year and for your CapEx plans as well. Take a short break, continuing our conversation on the markets on the other side with the F&O update and a lot more. Stay tuned.